5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Thursday. A warning to Russia. President Trump presses President Putin to agree to a ceasefire as they gear up for their meeting. An AI comeback. Apple rises on plans for its slate of new devices. We're going to have more on that Bloomberg scoop coming up. And another all-time high. Secretary Bessent's call for steep rate cuts powers the market ahead. And we close at a 17th record high yesterday. We take a pause from that this morning, down less than a tenth for the S&P, NASDAQ down a tenth. The small caps underperform, but again, it's this market that just continues to melt up. After those comments from Secretary Bessent, you had this real wave of bets coming on that we would get more cuts. In fact, 25 basis points fully priced in for a cut in September, even a little bit more than that, which would suggest that some people are betting 50 basis points worth of cuts will be next. Let's see what the bond market is doing, because again, that led to a rally in the front end yesterday. This morning, little changed. We are looking at a 10-year yield, though, that is down by about 2 basis points. By the way, Mary Daly giving an interview to the Wall Street Journal saying that 50 basis points, a jumbo rate cut, she doesn't see the justification for it. Here's the other asset moving off the back of those Bessent comments. It is strength from the yen. As Secretary Bessent also told John and Anne-Marie yesterday on Bloomberg that the BOJ is behind and should be hiking. Let's get you some stocks moving underneath the surface with Valerie Teitel. Hey, Val.
Hey, let's start on earnings with Cisco Systems falling nearly 1.5% in pre-market. Now, Danny, they did give some guidance that essentially came in line to Wall Street expectations, but the market was really hoping for something a little bit more, especially after their sales related to AI came in quite strong. I think the market expected some revenue upgrades off the back of that. So Cisco Systems down 1.5%. Let's move on to Coherent. This is another stock that is falling after earnings. They're involved in the photonics and optics material space. They also have a semiconductor business. Their shares are down 18%, Danny. The results underwhelmed, but they also announced that they're going to be spinning off their aerospace and defense business to Advent for $400 million. Lastly, let's end on Bumble, the social media dating app that is falling in pre-market around nearly 9%. And this comes after the CEO and BlackRock announced that they will be selling 16 million shares at an 11.5% discount. And that is rattling the market at the moment. Danny.
Valerie, great roundup. We'll catch up with you later in the hour. Also in this hour, in just moments, BlackRock's Wei Li will join us on where she sees challenges in the market, and we'll be catching up with Marvin Lowe of State Street later this hour on the Fed's rate path ahead. Now, BlackRock's Wei Li is weighing in on the lingering market uncertainties, writing, quote, mega forces are shaping an economic transformation with an unknown end. We won't have answers for some time to big questions about the future shape of the world, making long-term investing more challenging. I'm pleased to say that Wei joins us now, BlackRock Global Chief Investment Strategist. Wei, I think this is so important right now because there are huge questions out there. How does trade remake the global economy? What happens with AI? What happens with a supply shock in the labor force in the U.S.? If we don't have the answers to these questions for some time, how do you position yourself for the long term?
Good morning, Danny. The short answer to your question is that it's increasingly uncertain over the longer term, and point forecasting for strategic horizon is basically pointless, which is why we're rolling out scenarios to navigate the longer term. And also, which is why we are actually focusing more on the nearer term, where certain rules around how economies function, how global trade function would govern how quickly things can change. So we're putting more risk budget over the nearer term, the tactical horizon, which is also why, even though there's a huge amount of uncertainty over the longer term, we're risk on in the near term.
Risk on, Wei. So what is in the price and what could spoil the party? As yesterday we reached a 17th all-time high in U.S. stocks.
That's a very good question. 17th all-time high in U.S. equity market, and we're close to 30% higher from April lows. So it's understandable that markets are also feeling a little nervous, and investors are also feeling a little nervous, especially as we head into a period where growth could be lower and inflation could trend a bit higher because of the impact of tariffs. But I would say, though, right now, markets are talking about more Fed cuts against the backdrop of not a recession. Very few people are talking about recession. Yes, we're looking at growth below trend, but we're still look at consensus 1% for this year. So growth is holding up okay when markets are getting excited about rate cuts. And at the same time, markets are not an economy. The equity market is further turbocharged by the AI super cycle. You look at earnings, tech is still driving, doing the heavy lifting of earnings. And this year, consensus are looking at 25% of growth in terms of earnings for tech versus about 4% for the broader market outside of tech. So we're still talking about AI super cycle charging the equity market that further differentiates it from the economy that is currently being supported by rate cut hopes. So when you bring all of this together, even though markets have come a long way, I think the right posturing at this current juncture is still risk on, which we have held since early April.
Wei, I know you're a big proponent of diversification, especially with some of the alternative strategies, things like infrastructure to capture those tech bets. There was a really interesting FT story this morning that just talked about the sheer size of money being thrown at this. They quoted a banker saying that we're in the period where capital markets are crazy enough to throw money at almost anything. Wei, again, this is a long-term trend that we don't quite know how it's going to play out. Is there a risk that we're moving to a world of overcapacity, that we're investing too much in the data centers before we know how really AI is going to be used more broadly?
There is always the risk of that when we're talking about a super cycle, when we're talking about structural transformations like the AI build out. So there is such a risk, but I would say that at this juncture, the answer to your question is not going to be clear, and it is not going to be clear for quite some time. And right now, companies are spending and overspending just to stay at the table, right? You look at CapEx commitment by hyperscalers, despite the earlier year DeepSeek concern around how much more you need to spend to build a smart model. Hyperscalers are confirming and increasing their CapEx commitment, going to show that the momentum can run for some time. And you talked about infrastructure. I was just pulling some performance data overnight. Listed infrastructure 15% up on the year in the US is outperforming the broader benchmark, and the private infrastructure debt, for example, actually are doing the best across the various segments within private market, going to show that this is really the exposure that we want to own, sitting at the intersection of various mega forces, including AI, but also low carbon transition, also supply chain diversification build out because of geopolitical fragmentation. So we continue to view this as a major theme that we want to own across a few scenarios that we see playing out over the longer term.
And to your point, Wei, this is a big theme that the market is trading on. The theme that the market has stopped trading on after the start of April is tariffs, maybe because it's not fully showing up in the economic data or elsewhere. As you think about the trades for the short term, do you expect tariffs to regain as a trade in the short term, or is this a longer term trend to figure out down the road?
If you look at the Bloomberg tariffs uncertainty index, it's fallen a long way from early April highs. And of course, there are still crazy headlines flying around about tariffs, and by virtue of negotiations and the nature of what's going on, we will still see very noisy headlines. But I think markets have decided that tariffs at this level, somewhere between kind of 16%, 20%, is stomachable in the context of strong earnings, in the context of deregulation, in the context of Fed cut expectations. And I would, to some extent, agree with markets, because tariffs never operate in isolation. There is the broader fundamentals. And I think at this current juncture, it's possible markets will shift focus from tariffs to some of the other things that I talked about that will be increasingly driving equity momentum. them. And I would also observe that even though so far tariffs haven't shown up in some of the inflation numbers as much as some would have feared, there are signs of them feeding through, though, to inflation numbers. You look at goods in the latest CPI number. Just for context, U.S. goods, core goods from 2000 and 2020 basically did not change. And over the last 3 months or so, it was annualizing at 1.5%. It's not high, but it's quite a sea change from the period before. And also super core services, they're averaging, annualizing at 3.1% the last 3 months. So the bigger picture is that we're still in an environment of inflation, high for longer, settling at a high for longer environment. So thinking about parts of the portfolio components that can shield you from structurally higher inflation is a core theme in our asset allocation.
Wei, this has been fantastic. Unfortunately, we're going to have to leave it there. Thank you so much for joining this morning. That's Wei Li of BlackRock. Now to some other top stories that are trending on the terminal this morning. The Japanese yen is rising to a 3-week high after Treasury Secretary Scott Bessent called on the Fed and the Bank of Japan to adjust their monetary policy.
The Japanese have an inflation problem. I've spoken to Governor Ueda. My opinion, not his, they're behind the curve, so they're going to be hiking, and they need to get their inflation problem under control.
The UK economy faring better than expected, with GDP rising 0.3% in the second quarter. Those results provide some relief for Chancellor Rachel Reeves and raises the bar for further rate cuts from the Bank of England. And Han Hai posted a better than projected 27% rise in profit over the June quarter. The firm, which assembles NVIDIA servers and Apple iPhones, also projected the current quarter will deliver a 170% rise in revenue from servers made for AI tasks. Coming up, Trump's warning to Putin, end the war or face the consequences. We're going to have more on those talks due to take place tomorrow, coming up next.
Yes, they will. Yeah.
What will there
will be consequences.
Sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences.
That was President Trump speaking at the Kennedy Center on Russia. Oil little moved again ahead of that meeting between Russian President Putin and Donald Trump. Let's get a check on other markets beyond oil this morning, though, because we are coming off the back of record highs. I should say WTI is up 0.5% this morning. Gold futures down about 0.2. The 10-year yield down 0.3% at 420. S&P 500 futures little change. But let's get back to that top story with the presidents of the U.S. and Russia set to meet in Alaska tomorrow. Joining us now is Bloomberg International Affairs columnist Mark Champion. Mark, ahead of this meeting, we also had a phone call between the European Zelensky and Trump. What appeared to be the outcome of that?
Yes, well, I mean, all of the public comments afterwards were encouraging in a way. So before this meeting, there was a lot of concern that President Trump was talking about exchanges of territory, a lot of confusion on the American side about what exactly the Russians had suggested to Steve Witkoff when he was in Moscow, and so it was a great deal of concern that here we were going to have a meeting without Ukraine present, without the Europeans present, where President Trump was planning to start talking about giving territory. So there was a lot of worry. Then, you had this meeting. It was organized by the Europeans. Zelensky went to Berlin to be part of it. It was a Zoom meeting with the president. And there he seems to have kind of walked back, said that, we're not going to be doing anything definitive here. And there was, really a kind of scene setting to make sure that nothing untoward happened. And that seems to be what the various sides seem to be happy that that's going to take place. And now you have President Trump meeting with Putin in Alaska. saying it's just an opportunity to listen and so on, and yet at the same time saying there'll be very severe consequences if the war continues. It's not entirely consistent, but I think at this point, the Europeans, Zelensky, will be a lot less worried about what might come out of this.
And local Russian media, by the way, Mark, just saying at the moment that the talks will start at 11:30 local time, 11:30 a.m. in Alaska, is 3:30 here in New York City. And you mentioned that Trump had said that Russia would face very severe consequences if Putin didn't agree to a ceasefire. But Mark, in those same comments, we also had Trump downplaying this first meeting, saying maybe there's a second meeting. Maybe that second meeting includes Zelensky. So what is the bar for success out of these talks? How is the president of the U.S. setting this up, and what are the expectations?
All very good questions. I mean, this is a seat of the pants summit, to be very honest. These things are normally prepared for months. This kind of event, Putin hasn't been to the U.S. since 2007, so this happened very quickly. It's not very well prepared. We don't know. I think the bar is being set low in Europe. They just want no damage. They don't want him to, give anything away to Putin, beyond the fact of the meeting. If he comes away upset with, the Russian president, if he comes away, saying that, we're going to impose consequences, he does have the ability to do that. Russia's economy is not doing well. It is quite exposed. There are, significant overhangs of credit that, the banks in Russia are kind of struggling with. So if he wants to impose secondary sanctions, making it difficult for Russia to sell its oil to Russia, to India, to China, etc., if he wants to carry through with those threats, they will be painful for Russia. And in the same way, he has kind of pulled back on what the U.S. does in terms of supporting Ukraine militarily. Everything is only done if it's bought by someone else at this point, with U.S. equipment. If he changes on that, that would be very concerning to President Putin, who's doing well on the battlefield at the moment.
All right, Mark, thank you very much for that. Mark Champion of Bloomberg Opinion. By the way, to that point, TASS reporting that the Kremlin says Putin and Trump would discuss economic cooperation. Okay, coming up, Apple's push into AI. We take a closer look coming up. You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at the front pages this morning. What's making headlines? First up, on the Bloomberg, an exclusive. Apple is plotting another big push into AI with an ambitious slate of new devices. Those include robots and other entry-level smart home products. Apple shares climbed to a session high on that news. And a Wall Street Journal exclusive. San Francisco Fed President Mary Daly pushed back against the need for a 50 basis point interest rate cut at the Fed's September meeting. She said that She's further said, that the labor market is not in a bad place right now, but that the direction of change is going the wrong way. And on the FT, Chinese AI company DeepSeek delayed the release of its new model after failing to train it using Huawei's chips rather than NVIDIA's. It comes after Beijing demanded that Chinese tech companies justify their orders of NVIDIA's H20 and encourage the use of domestic alternatives. Now to the world of crypto, where Bitcoin has hit a record high overnight. Investors pushing deeper into risk-taking territory across markets, though a little bit weaker this morning. Joining us with the latest is Bloomberg cross-asset markets reporter Justina Lee. Justina, it is great to see you. And as you know well, the animal spirits were alive and well across most markets yesterday. But why the latest leg higher in crypto?
Yeah, I think part of it just reflects this risk-on moment that we're in. The S&P 500 is in another record. And, with kind of people expecting the Fed to cut rates again, I think crypto is just getting swept up with animal spirits. But of course, there's some crypto-specific factors here. I think people in general are pretty optimistic about kind of the regulatory front with, the Trump administration. And at the same time, there have been all these digital asset treasury companies where, I mean, their whole kind of raison d'etre is just to buy more crypto. So I wish kind of there was a more clever explanation, but that's definitely part of the story.
Hey, whatever works. But Justina, also yesterday, we got the IPO of Bullish, a crypto exchange. It had a huge debut. Automatically, you get 2 minted billionaires off the back of that IPO. I think it's up another 13% in the pre-market. What does it tell us about this moment when earlier this year, not even just crypto IPOs, but IPOs in general were pretty icy and put on hold to now get something of this magnitude?
Yeah, I think it really tells you that, people aren't just buying, blue chip stocks. They want kind of the riskiest names out there. And crypto is just part of that. And, one interesting thing about Bullish is that not only is it a crypto brokerage company, it also holds some crypto itself. So I think it's also part of this narrative that for some reason, if you set up a company that just buys crypto, people automatically kind of like that narrative, even though they can also just go buy the crypto kind of themselves. And so I think it really kind of reflects, these crazy, not to use a pun, but these crazy bullish sentiments out there.
Justina, you can never have too much bullish. Thank you very much for that. That is Bloomberg's Justina Lee. And as we mentioned, Bitcoin hitting a new record overnight. It's a little bit weaker this morning, although you can see the bullish IPO. That thing is still up 14%. Again, it had a huge debut yesterday. If I just look at what Bullish did on its first day debut, up 83.8%. It also matches some of the moves in IPOs like Circle, for example, so those being well received. Okay, coming up, more on the Fed's rate path. We're going to catch up with State Street's Marvin Lowe, who joins us for the next half hour. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Thursday. A warning to Russia. President Trump presses President Putin to agree to a ceasefire as they gear up for their meeting. An AI comeback. Apple rises on its plans for a slate of new devices. We're going to have more on that Bloomberg scoop coming up. Another all-time high. Secretary Bessent's call for steep rate cuts powers markets ahead. And we are taking a break from those all-time highs, the 17th all-time high yesterday. Little change this morning for both the S&P and NASDAQ. Russell 2000 futures, those underperform, but it's everywhere. Bitcoin hits an all-time high. The VIX closes at its lowest level since 2025. And this bond market has been trading in an extremely tight range. It was a rally yesterday in the front end. That is a little change this morning. 10-year yields, those go down by almost 3 basis points at 420.56. Bessent seemingly moving markets here, be it his call for very steep rate cuts, moving yields, or saying that the BOJ needs to be hiking. The yen strongest in about 3 weeks versus the dollar, down about 0.5%. The dollar is versus the yen. Let's look at some stocks moving in the pre-market. With that is Valerie. Hey, Val.
Good morning, Danny. Let's start with earnings. We heard from Cisco Systems after the bell. A bit of underwhelming guidance from them. It was bang in line, but investors were hoping for something stronger, given they've had a pickup in AI sales in the previous quarter. And some analysts were marking this as a conservative guidance from Cisco. We're seeing shares down 1.4% in pre-market. Let's stay with earnings and move on to Coherent. Now, this is a company that is involved in photonics and optics. They also have a semiconductor business. Those shares are falling nearly 19% pre-market. Their results were slightly underwhelming, and they announced that they're spinning off their aerospace and defense unit for $400 million to Advent. Lastly, let's end with Bumble. This one not on earnings, but on news that the CEO and BlackRock are planning to sell shares. 18 million shares will be sold at an 11.5% discount. That's rattling the market this morning. Bumble down 8.2%. Danny, we haven't seen a move like this in Bumble since they announced their round of layoffs in late June.
Great context. Valerie, thank you very much for that. Now, elsewhere in the world, President Trump spoke with European leaders ahead of his summit with Russia's Vladimir Putin, which is set to take place on Friday. Later at the Kennedy Center, Trump was asked if Putin would face consequences if he failed to stop the war.
Yes, they will. Yeah.
What will those consequences
there will be
sanctions, tariffs?
There will be, I don't have to say, there will be very severe consequences.
For more, we're joined by Bloomberg's Lauren Dezensky, who helps lead our breaking news coverage out of Washington, D.C. So we had a call with Europeans yesterday. Tomorrow we get the meeting, which Russian media says will take place about 3:30 p.m. Eastern time. What are the expectations at this point?
Great question. We know that Trump wants a ceasefire. More than anything else, when Trump talks about the war in Ukraine, he talks about the violence, the killing, the bloodshed. It's very graphic imagery that he uses, and he really just wants a deal. Obviously, that is par for the course with the president. We know that he will have this meeting with Putin, and European leaders are really trying to get a sense of what exactly they're going to talk about. That was also why we saw so much movement yesterday about these leaders pushing Trump, asking, what are we going to talk about? What are we going to discuss? And really, what concessions will Trump make potentially on behalf of Ukraine? Would this even happen in order to get Russia to the table, as well as then what will they actually agree upon? Obviously, I'm not talking in specific terms going forward, just simply because we don't really know what's going to happen here. All we know is that the two leaders will talk about something. Trump has said that he will call Zelensky as well as the European leaders after the meeting. And we also know that Trump wants to have possibly a trilateral meeting between the U.S., Ukraine, and Russia. But again, that's all very up in the air, and we'll just kind of have to see what happens tomorrow.
Lauren, I love this, that what we know is that they'll talk about something, and that's kind of it at this point. It's also worth following up with you on the excellent conversation that Anne-Marie and John had with the Treasury Secretary Bessent yesterday, urging the Fed to lower rates by at least 150 basis points. Let's just take a listen to that.
We should probably be 150, 175 basis points lower. So, I think the committee needs to step back. I think probably one of the most politicized governors just went off the board.
And Lauren, it's not just that he said that, it's that markets moved on that as well. Do his comments take on a new importance because this is the man leading the search for the next Fed chair?
Definitely. I also think we don't see the Treasury Secretary make comments like this. It was obviously so significant that we actually sent that hot headline on Bessent's comments about that rate cut that he wants to see. And we also saw Bessent cite the BLS data, saying that had the data been better, we could have seen rate cuts in June and July. This is a lot of forward-thinking fiscal policy that the Treasury Secretary is talking about, that, again, it's untraditional to hear him say that. However, clearly Bessent is in Fedland, considering these Fed chair contenders. As he said in the excellent Bloomberg interview, he said that there's 10 to 11 contenders, which we saw 3 more names out yesterday from CNBC's reporting on the private sector side. So clearly these names are kind of in the mix. Bessent, who is wearing a lot of hats, Elon Musk might be jealous of this, but Bessent is dealing with so much, I think, in terms of not only these trade negotiations, he's dealing with the Fed chair pick, BLS. There's really just so many things that he is considering. But obviously this Fed discussions, as well as these rate cuts, I mean, as we saw, the markets speak for themselves.
Yeah. So many different jobs to take care of and making news basically on all those fronts. Lauren, thank you so much for that. That is Lauren Dezensky. Now, State Street's Marvin Lowe is paying close attention to the Fed sweepstakes, but also the economic data, writing, quote, "While we think the data has turned enough for the Fed to pivot from its wait-and-see approach, there still remains scope for market surprises if the cutting cycle does not evolve as aggressively as investors are presently expecting." I'm pleased to say that Marvin joins us now, senior global macro strategist at State Street. Marvin, great to see you this morning.
Good morning.
Thanks
nice
for coming
to see you
in.
too.
And there is some aggression being priced in to the point where there are some bets being placed on that we get 50 basis points worth of cuts in September. Have we gone too far at this point?
I mean, if you're aggressively betting that we're going to get another 50 September, if you will, I think you're ahead of the curve. I think that certainly there was data that kind of got us to the point where we could talk about cuts. But you still, as of June, had almost half the committee saying that they didn't think a cut was necessary at all. So there's going to be some pretty deep discussions, but to get to 50 fast is in my mind, ahead of the curve.
Well, there has been this idea, and you kind of hinted at that the makeup of the board, the makeup of the FOMC rather, has started to shift, and you're seeing more dovish comments. Sure. You're not seeing it from everyone, though. Yesterday, we had Goolsby saying the labor market is still strong, saying I want to reserve some more surety that it's not going to be persistent inflationary shock. Bostic saying that I still have just one cut on my outlook. So to what degree is this a Fed that is coming around the idea to becoming more accommodative, or simply just a Fed that's becoming more divided?
Yeah, I mean, remember that the Fed thinks that from a holistic perspective, granted, you know, the spread between some of the views are pretty wide, that they're still going to cut 2 times this year. They said that in June. They said that in March. They said that at the end of last year. So from that perspective, there was consistency in the view that it was going to take time to get a sense of what was going to happen and when they were going to be able to start resuming the cutting cycle. September and December is a pretty normal cutting cycle, ultimately, if you're kind of approaching it from a moderate perspective. So they should be having the conversations now, but really kind of getting, again, at the necessity of a 50, potentially getting to 3.5% by the middle of next year. That's really aggressive in my mind.
Well, if they want to have a shift, they have Jackson Hole to do so. If they want to have it next week. Last year, Powell saying now is the time to adjust was the big takeaway. Could we get something like that again this year?
Yeah, I mean, it's always a possibility. Again, I don't see it based on the data that I'm looking at that you would need to be aggressive in that kind of discussion. The market's already giving you the opportunity to cut without really adding volatility to it. So, one of the other things to think about is if the Fed doesn't cut, that would be a big surprise. We're pricing in over 100%, if you will, from that perspective. And there's credit tightening that goes along with it. Do they want to do that? I think, like us analysts that are sitting on trading just trying to figure things out, that's part of the calculus.
Well, given that, we have seen a bond market that's been kind of remarkably calm. We've been in a tight trading range. The front end and the middle of the curve are basically where we were on April 8th. What do you make of just the lack of movement despite a distinct not lack of headlines?
Yeah, I love it when we get to talk the curve. You know what? There's still a lot of questions that are out there. There's still a lot of questions around the demand for treasuries. There's still a lot of questions around the amount of debt to be issued. And really a Treasury Secretary who is, aggressively talking about where he thinks yields should be. Again, that's unusual. It does speak to potential independence issues when you're talking about the folks that are trying to figure out who's going to head the Fed within a fairly short period of time. I think that reticence is still making its way into the bond market.
Well, one of the interesting things is in that interview with Besson, he talked about the need that Japan should be hiking, that they're behind. But you're only really starting to see the reaction in the currency market today. You are seeing that's the 2 cents, but you are seeing the yen is strengthening versus the dollar. Do you interpret those comments as a White House, as a Treasury Secretary that is very much so still trying to pursue a weak dollar policy?
Yeah, I mean, that was my initial knee-jerk interpretation of it. The weaker dollar and lower yields is something that the White House really wants from a trade perspective as well as from a deficit funding perspective. And in the back of my mind, that's really what's driving a lot of these discussions. Investors want lower yields. I mean, lower yields just translate throughout not only risk assets, but they move around the world given where treasuries fit kind of within that safe asset. So we had generally been underweight duration given that we're talking about a cutting cycle. So there's a little bit of a catch up from that, but it also is what the market wants to hear. Eventually data, inflation, and ultimately the impact of all of that on the consumer is what determines kind of things more longer term. But for the moment, there definitely is momentum in that.
All right, Marvin, we need to continue this conversation. Sure. Stay with us. That is Marvin Lowe, who's sticking around. Let's first get you some other top stories that are trending on the terminal this morning. And sorry if you are watching this from New York, because rents on Manhattan apartments have hit a record high. It's the 5th time it's happened in the past 6 months. Prices surged by more than 9% from a year earlier. That is the second biggest annual jump since 2008. The Port of Los Angeles handled the highest container volume in its 117-year history last month. Uncertainty over President Donald Trump's tariffs drive shippers to front-load cargoes. The busiest port in the country moved more than 1 million 20-foot equivalent units in January. That's an 8.5% increase from a year ago. And President Trump signing an executive order to ease regulations for the commercial space industry. The order could directly benefit Trump's one-time ally, Elon Musk's SpaceX, as it ramps up test flights for its gargantuan Starship rocket. Coming up, Apple plots a comeback. We're going to get an update on tech coming up next. This is Bloomberg. Welcome back to Bloomberg Brief. I'm Danny Berger in New York. Apple plotting its AI comeback. Bloomberg exclusively reporting that the tech giant's ambitious new slate of AI-powered devices, as well as a more lifelike version of Siri, to rival offerings from OpenAI and others. For more detail, we're joined now by Bloomberg tech reporter Newly Purnell. Newly, what are the details on this lineup that Apple is readying for its AI comeback?
Yeah, some really great details from our colleague Mark Gurman. He's talking about three main products that it seems like Apple has in the pipeline. The first is a tabletop robot, so if you envision a kind of screen on a robotic arm. The second, it was a smart home display, a smart home speaker rather with a display. And the third is a home security camera, so it's sort of like Amazon Ring-like device. The most important, the centerpiece, as Mark says in the story, would be the tabletop robot. If you envision a sort of iPad mini-shaped display on a robotic arm that could move around the world and follow you, it would present a way for consumers to interact throughout the day. A big push by Apple into the home to be able to, FaceTime people, to ask for directions or recipes when they're cooking, or do FaceTime calls. So a potentially really interesting new product that would, incorporate also Siri, a more enhanced Siri, the AI developments there, making it more lifelike, more interactive.
The future is now. I'm kind of terrified by a robot that's going to be following me around my home. But with all of this, Apple has been at a disadvantage given the hiring that's happened out of Apple, some of their top players, the leg up others have. How do they compete in this space? Just how far back are they?
Yeah, I mean, they've really taken a hit over, I think, the months, years over, for example, using Apple Intelligence in a lot of their marketing. People look around and see the advances that the other big tech companies are making, and they say, what's Apple doing? They had the Vision Pro, of course, which is a big moonshot, as Mark notes in the story, that hasn't really caught fire. There haven't been a lot of, revolutionary changes to some of their core products. And people have been saying, what's going on? Yes, they've had these issues with talent. People have been waiting to see what's Apple's play going to be. I think, as Mark points out, what's really interesting is they're not rushing into some of these newest applications like LLMs. Instead, they want to seek ways to improve Siri and use some of these underlying AI technologies to incorporate them into the hardware. And so if you look at the history of Apple, that would make sense. They're not always rushing to be the first creating a particular product in a category. They wait and do it better. And so the idea here is that they would continue to work on some of these AI technologies and incorporate them into some potentially exciting new products that could really take hold with consumers, I think.
Newly, thank you very much for that update. We appreciate it. That is Newly Purnell. And I'm pleased to say that State Street's Marvin Lowe is still with us. Marvin, you ready for a robot to follow you around your home?
I think I'm as hesitant as you are at this point.
Fair enough. But look, Apple is one of many, many companies that are spending a lot of money. Apple may be even behind on this. So much money is being thrown at it from the hyperscalers, from private capital. They're doing all the funding, putting billions of dollars to work. But at this point, we don't exactly know how it shakes out. How much of this is almost investing just on faith, and faith that there is a risk it doesn't fully come to fruition, and just the amount that's being put to work?
Yeah, I mean, the amount is staggering, for sure. But the amount, if you will, and this is like ancient history, that was invested in the internet was staggering, relative to overall CapEx. Just personally, I'm seeing AI make its way more and more into my life. I don't know if it's making my life easier, but it's going to continue, and presumably with all of this money that's going in, it's going to ultimately change how society, to a certain degree, interacts with each other. Whether or not it really gets to the degree of transformation that I think the dollars that are going into it would imply is still questionable. But that golden pot at the end of the rainbow is pretty bright right now.
And because of that, we're spending a lot and using up a lot of resources too, from utility to energy. Yeah. Is there a real risk that this is crowding out other parts of the economy?
Yeah, I mean, just from a capital spend perspective, when we kind of look at where companies feel comfortable putting money in, particularly given a world where there still is a lot of uncertainty on the trade side of things, on the tariff side of things, and we keep hearing how reticent companies are to commit capital, whether it's human capital and or machinery capital. Given that uncertainty, it does crowd out. It's an easy investment to make because you have to. All your other competitors are doing it. But is there a risk to other, if you will, capital producers within that kind of discussion?
What about risk to consumers? Neil Dutta has been talking about the idea that energy gets more expensive because of the demand coming from AI. Does that turn around and maybe peak up inflation a little bit, or in the margins maybe even weaken growth as people have to spend more on energy?
Yeah, I mean, for sure, and we've seen it over the course of the last couple of years, whether it's electricity and or energy in general prices, natural gas, remember last winter, kind of how that influenced prices. Certainly that's a risk. The inflation story is one where there are so many different components, and we saw that in CPI. Higher one place, lower the other. Overall, you have the ability to kind of move your wallet, if you will, into the areas that it needs to. Energy is discretionary, so it does impact lower income a bit more than the rest of the income stack.
All right, Marvin, stay put. We are going to discuss your trading diary coming up next and what you need to watch out for. You're watching Bloomberg Brief. Welcome back to Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading day on this Thursday. More earnings. We'll get Deere and Tapestry coming before the bell. Then some data, PPI and jobless claims. Those are due out at 8:30 a.m. Eastern. Finally, quarterly results from Applied Materials. Those will come after the closing bell. And please say Marvin Lowe of State Street is still with us. Marvin, the earnings season rolls on. And looking at just commentary from corporate executives, you still see some of that uncertainty creeping in. But otherwise, has that really shown up on the earnings level itself? Does the commentary match what we're actually getting from companies?
Ultimately, no. This last earnings season was a surprise to the upside. I think everyone's, quite pleasantly surprised. You see it in really how stock prices are doing. What I would say is that the uncertainty that we had now is probably a little bit less than it was in April, and we made a lot of adjustments in April. So to a certain degree, there's a bit of rope that companies can still use to set up the environment. It becomes much harder as they need to start talking about 2026, and that really happens in the fall, which historically has been one of the more volatile periods for the markets.
Well, I was going to say, because Goldman had this report, which is maybe why the president is mad at Goldman Sachs, but had this report that about 2/3 of companies in the earnings reports were absorbing higher prices in the form of worsening margins. How long can that continue, and what happens if it changes?
Yeah, I mean, historically, the ability of companies to pass through kind of these tariffs, taxes, to an economy that's still performing well is something that you would expect. And I think that that's really one of the questions that still faces the Fed at this point as they go into Jackson Hole, as they go into this pivotal September meeting.
All right, Marvin, we're going to have to leave it there. Thank you so much for joining for this past half an hour. It is always such a pleasure to have you on. That is Marvin Lowe of State Street. Let's just quickly whiz through some of the stocks moving. Cisco, that is flat. It gave a cautious forecast for the current year. Virgin Galactic, other space stocks picking up after Trump's executive order to help the industry. And bullish, that IPO continues at pace, up 17% in the pre-market after an IPO to an 80% gain yesterday. Okay, that's it for Bloomberg Brief. Surveillance will take things from here. You're watching Bloomberg TV.